All right, let's talk about investing. Sometimes the best opportunities are the ones staring us right in the face, hiding in plain sight. And today, we're digging into a company that's a perfect example of this, A.O. Smith. Now, you might not recognize the name, but trust me, it's this hidden engine quietly powering millions and millions of homes.
I mean, seriously, think about your water heater for a second. When was the last time you did? It just sits there, right? Tucked away in a closet or down in the basement. And hey, as long as that morning shower is hot, you probably don't give it a second thought. It's like the definition of out of sight, out of mind.
But what if I told you that this, well, boring box is suddenly at the dead center of a huge global trend? We're talking about decarbonization, electrification, the big stuff. Yeah, you heard that right. The humble water heater is now a key player in the whole push for energy efficiency. Who would have thought?
So that brings us to the big question. The reason we're here. If the water heater is suddenly this hot-ticket item, does that make its biggest manufacturer, A.O. Smith, a smart investment for your portfolio? That's exactly what we're going to break down right now.
Okay, so to really get A.O. Smith, you have to understand that it's basically a tale of two businesses. Think of it like two totally different companies living under the same roof. They each have their own story, their own struggles, and their own successes.
And wow, this chart just lays it all out, doesn't it? On one side, you've got North America, this steady, reliable cash cow. And on the other, you have the rest of world segment, which is, well, it's a bit of a roller coaster. Just look at those numbers from Q2 2025. North America isn't just bigger in sales, it's an absolute powerhouse when it comes to profit. I mean, a 25.4% margin, that's more than double what they're making everywhere else. It's a huge difference.
All right, so let's zoom in on North America for a minute. Because this really is the foundation of the whole company. It's the profit engine that makes everything else go. The resilience of this business is just incredible. A.O. Smith has locked down about 35% of the U.S. residential market. And think about it, water heaters don't last forever. So there's this constant, predictable need for replacements. It's not like buying a new TV. It's not a nice to have. When your hot water goes out, you are buying a new one, period. You throw in their massive distribution network and a brand name that people trust, and yeah, it's a fortress.
And that's how you get to those incredible profit margins we just saw. That 25.4%, it's not just a number on a spreadsheet. That is the cash that fuels the entire company. It pays for the dividends, it funds the stock buybacks, and it's what they use to invest in what's next.
Okay, but here's the twist in the story. Every hero has a weakness, right? For every powerful engine, there can be something holding it back. And for A.O. Smith, the big flashing question mark for investors is China.
I mean, this is a total 180. China used to be the big growth story for these guys. Now, it's turned into a major drag. You've got a shaky real estate market, consumers aren't spending like they used to, and it's hitting the business hard. Sales in China fell 11% last quarter, and for the whole year, they're expecting a drop of 5 to 8%. That is a serious headwind to be flying into.
So, what's the game plan? Well, management isn't just hoping things get better. They've kicked off a formal strategic review of the whole China operation. And let me tell you, that's a very big deal in the corporate world. It means everything is on the table. Partnerships, even selling off the business entirely. And if they do that, it could unlock a ton of value just by getting that cloud of uncertainty out of the picture.
All right, so let's recap. We've got the super stable North American cash cow, and we've got the big China problem. But this is where the story gets really interesting for investors. The whole bull case, the reason to get excited about this stock, boils down to two huge potential game changers, electrification and India. So first, electrification. And at the heart of that trend is this cool piece of tech called a heat pump water heater. The easiest way to wrap your head around it is to just picture a refrigerator working backwards. Instead of pulling heat out of a box to keep things cold, it pulls heat from the air around it and puts it into the water. The result? It's crazy efficient. We're talking 3 to 5 times less energy than your standard water heater.
And here's the rocket fuel for this trend. The US government is literally paying people to make the switch. Through the Inflation Reduction Act, you can get a tax credit of up to $2,000 just for installing one of these things. That's a huge incentive, and it's completely reshaping the industry. And who's sitting right in the middle of it all? A.O. Smith.
Now for that second catalyst, India. As all this trouble is happening in China, the company is making this really smart pivot. Their business in India is already on a tear, growing 19% last quarter, and now they've gone and bought a water treatment brand called Pureit.
They're basically running the exact same playbook that works so well for them in North America. It's pretty clear they're setting up India to be their new big international growth engine.
Okay, let's bring it all home. We've got the stable business, the China issue, and these new growth drivers. The so what for an investor is, what does this all mean for the bottom line?
First off, this company is an absolute machine when it comes to rewarding its shareholders. That North American cash engine we talked about, it's allowed A.O. Smith to raise its dividend for more than 30 years in a row. That's the kind of reliable track record that dividend investors dream about.
And it's not just about the dividends. Management is putting its money where its mouth is. They've upped their plan to buy back their own stock to $400 million this year. That is a huge vote of confidence. It basically screams that they think their own stock is a great deal at its current price.
And if you look at the stock's price, it starts to look pretty interesting. Right now, it's trading at a P/E ratio of about 20. Now, to put that in perspective, its own average over the last 5 years is up around 25, and its competitors are trading higher too. So what does that tell us? It suggests the market is really fixated on the bad news out of China, which might be creating a nice discount for anyone who believes in that North American growth story.
So this is what it all boils down to. It's one single question you have to ask yourself as an investor. Do you see A.O. Smith as this super stable, dividend-paying company that's got this massive government-fueled growth catalyst just kicking in, or is that lingering uncertainty in China just too big of a risk to take on? That's the debate, and that's the decision at the very heart of this investment.